All right. So, before we dive into your SPAC, Matt, you have an exciting background, right? So I read through this and, you've been involved all kinds of investments. You've also worked with the New York Jets and the Miami Dolphins. Can you just walk us through a little bit of your investment history and what you're currently doing now?
Okay, great. Kind of hard to package my entire career because there's different buckets, but I guess areas of competency. First and foremost, I'm a builder. I know how to build things, especially in complicated environments. I helped oversee the rebuilding of the World Trade Center site. Right after the attacks on 9/11, I was there from the first minute and stayed for 2 years until we had a plan to redevelop the entire lower Manhattan. So that's my background. And my investment career has been about getting my hands dirty. I have played at every level from early stage, investing off of a deck, all the way riding into a unicorn to acquiring 20 to 40% stakes in consumer brands to outright acquisitions. And the common thread through all is I'm always looking for ways to add value. I love the consumer space, particularly the direct-to-consumer space. I teach a course at Harvard Business School that's all about the omnichannel journey called Moving Beyond DTC. But that's my passion, backing great brands, great founders, and figuring out how to provide value in an egoless way.
Looking at omni-channel businesses and brands, why is that an important market to target with this SPAC here?
I'm saying nothing that's not obvious. Everybody's been paying attention the last year, but there's been a compression of 5 years of e-commerce growth into 9 months, probably longer, to be frank. I think that's actually underestimating. The course I teach at HBS is all premised on the idea that a digitally native brand won't stay that way for very long. You have to go omni-channel in order to be successful. What you find is these great, brands we all know the marketing, we all know the different brands that I'm talking about over the last 10 years since Warby Parker. They start out digitally native. They can do rapid customer acquisition because they can get to you through Instagram and whatnot. But what you find is the customer acquisition cost, CAC, begins to rise up over time as other incumbents rush into the space that you thought you were going to have to yourself with your new business, and it becomes a lot more expensive. What are you going to do? You're going to go omni-channel. You're going to go into retail. You're going to go into what and whatnot. That has only been radically compressed in the last 9 months, where the consumer expectation now is frictionless omni-channel commerce. If I walk into Walmart, I don't really care that I'm buying at the register versus buying on the phone now. I want complete flexibility to either have that item delivered at home, pick it up curbside, whatever it is I want. So it's that expectation of frictionless commerce that has changed everything. Sorry about that. In the last several months, the problem is going omni-channel, whether you're a brick and mortar operation or you're a pure play digitally native brand, is not an easy transition. We throw these words around, omni-channel. What does it really mean? For example, it means that your tech stack at your point of sale system needs to be able to talk to, your mobile, right? Those things need to be integrated. So a lot goes into it. So in forming this SPAC, I said, what are the key areas that if I'm running a modern consumer business that needs to go omnichannel, that I'm likely to be deficient in? And how do I bring those resources to bear on behalf of a future target? Again, you're putting the group together before you obviously have a target in mind. So a lot of it's theoretical, but in teaching at Harvard Business School, there are certain areas that I find tend to be missing. I'll give you an example. If there's an amazing business that you haven't heard of out there in SPAC land or whatnot that has tremendous growth, but you probably haven't heard of it, it's because they're probably over-indexing on performance marketing, growth hacking, CAC to LTV ratio, all the alchemy of customer acquisition, and under-indexing on brand and halo. So there are some great people on my team. Emmett Smith is an example, a founder of a company called Gin Lane, who did the marketing behind Sweetgreens and Recess and Smile Direct and a bunch of other great brands. So it's those kinds of sensibilities that I put together in this team.